and welcome back to New York session 2 for the day. It is 10th of April and we are about 9:30 Eastern now. Just a few seconds left, but that's okay. We are pretty close to let's talk about Euro USD 4-hour chart on your screens flashing right now. So last session we were talking about two possibilities. One was about the triangle which we have laid down here, and the other one, if there is not a triangle unfolding, then if it's wave 3 unfolding, then we are going to see a new high being print here. So at this point in time, it's becoming quite evident that maybe we are not, prices are not unfolding as a triangle. Maybe the pattern could be complete around yesterday's low. Here it is. Let me bring up the hourly chart. I think the pattern did complete as a running flat or a combination WXY, where Y did fall short of dropping below the new, dropping to a new low actually. But it looks like a flat complete around 1.0890. And what we are seeing right now is potential. First of all, let me remove that arrow which was indicating a triangle. So as far as the pattern is concerned on the hourly chart, it looks like we are if we start counting from here, then it looks like we are in a wave 1, potential wave 2, and that the third wave is progressing. And if the third wave is progressing, then we would be seeing prices breaking above that 1140-50 zone, possibly today itself. But if you look at the RSI is diverging. That's why it's not very convincing to me right now as we speak. It could be a complex situation where we are uh, we are still within the triangle or an expanded triangle. We don't know yet the confirmation, because corrective waves are really complex and they unfold themselves only when they unfold themselves. All right, so there is a humble suggestion. Those traders who are looking for a short-term profits, all right, short-term points in euro, as suggested yesterday, we are suggesting now as well. You should be looking to take profits, because Tokyo, Sydney potential longs were issued, and New York, we are back to a new high, almost 200 points higher than where we were a couple of sessions earlier. All right, so it's better to take some profits off the desk. It could be partial profits. If you're not interested in taking complete, I don't suggest to take complete profits, but at least take partial profits, uh, just in case if the price action is unfolding a complex expanded triangle or some other pattern. We will come to know it later, but since there is a bearish divergence on the hourly chart, it is quite possible that prices may retrace lower a bit before resuming higher or turning higher. At least partial profits could be booked around this price. All right, and those who are more interested in the wave theory, we are uh, we are possibly pushing higher within the minute wave 5 of minute wave 3 circle in the navy here. All right, and that price is suggesting a flash through 1.15 from here, 1.1475 to be precise. Possibly we are looking at 1.15, which will take out the September 2020 highs Eventually, we are very close to the September 2020 high, just about 100 points, not more than that. All right, so it's not going to be any surprise if it takes this rally, if this rally takes the previous high in a flash towards 1.1253, possibly towards 1.1475 without a stoppage. All right, and that's why, I mean, if you're not, I mean, if you don't want to book complete profits, it's perfectly all right, but at least take partial profits of the desk. All right, maybe if you're interested in the short-term position, you might want to take chance of taking partial profits so that you'll still be in the trade and you're still giving us yourself a chance just in case if prices drop lower or correct lower, you're giving yourself a chance to buy again. All right. For those who are positionally, it's still positionally inclined. There is nothing to do, nothing to be done, uh, unless you would want to take some partial profits. But positional traders would not want to do that. It's just about the price action, just about the time. We should be pushing through the 1.15 zone going forward. All right. So that is the story in a slight change in the structure. Once again, an hourly chart up on your screens for euro. It looks like we might be, or euro might be progressing within the third wave and not within a triangle. So I'm just taking that out, the triangle boundaries, and possibly also adjusting the minute wave 4 in place. All right. So here's the structure for euro, firmly placed on the long side and looking towards 1.15. Let's now go to the dollar index, please. As we saw in the euro, it is absolutely not any surprise, not at all a surprise to witness dollar index firmly on the south side. The only change that we are now suggesting is that we are not within a triangle. In fact, wave 4 of a minute degree, let me just move the boundaries or remove the boundaries within the triangle. It looks like we are now progressing within the third wave of minute wave 5, and it should be just about time before prices break lower. Unless something unusual happens here, I don't see any other change in the dollar index movement. As far as the wave structure is concerned, we are the dollar index is progressing lower within minute wave 3, which is no doubt it is extending. There's the structure minute wave 3, which is extending itself, and it is expected to terminate somewhere close to 98.25 as per the Fibonacci 0.61. All right, extension, and within the minute wave 3, we are within the in the last wave, which is minute wave 5, orange here. So if we go by the price action right now, I think it's not unfolding a potential triangle. Unless it is it's going to unfold an expanded triangle, or because we've seen expanded triangle going lower, printing a new low, and then flashing back higher again. But tell you what, as far as the trading is concerned, if you are by any chance interested in the short-term trading activity, then today, I mean, when we met in the Tokyo Sydney overlap, prices were trading close to 103.26. Right now it is 101.52, almost 200 points lower than intraday highs. It rarely happens, this kind of price action or activity, but it's happening in most of the instruments right now. You talk about euro, you talk about dollar index. We are going to look into pound again. We would see that volatility showing up there as well. Gold is amazingly volatile right now, so it's happening across the board. All majors are showing. Even in the equity markets, you saw the bounce coming up overnight. All right, so it's all happening, but as a trader, it is good for us because it's giving us trading opportunities both sides. So we went short, we covered, we again went short, we are again getting a chance to cover. So you might want to take some partial profits off the desk, say thank you very much, and then let the remaining run with a potential target of 98.25 going forward. All right, so that's the scenario in the dollar index, uh, including the wave counts and the trading potential or the trading plan right now. All right, taking fresh positions on the short side would not be recommended at this price because the risk reward ratio would then be quite different because uh, we were suggesting 104 when shorting at one selling at 103.50, the stop loss at 107. That's also 350 points. Right now it will be 550 points or even more, and the potential target is just about 200 300 points. So it's not a good risk reward ratio unless you want to open it up and run through 96 or 95. All right, it would just a different story altogether. But right now it's okay not to uh, initiate fresh shorts. Please stay on the sidelines and wait for a pullback, and then we will suggest another entry for sellers, fresh selling. Okay, right now we might want to either take partial profits or remain in the short side, on the short side, sorry, and potentially target 98.25 near term. And it's not too far. I mean, if this volatility continues, it might next week or maybe tomorrow we might see prices hitting 98.25. All right. Okay, so that's the story in the dollar index. Let's please move on to the pound dollar, GBP USD. And it goes much without saying that if euro and the dollar index are on fire, then pound would certainly be on fire. So right now, we discuss in the past session that we might be or pound might be escalating higher if it is going to be producing a third wave at a lower degree, correct? So that's what it looks like. Like we've got wave one and then two, and then the third wave is now progressing higher within the minute wave five, which is expected to terminate through the 1.35 zone. There you go, 1.34, 1.35 zone. All right. So that is the structure. As fresh positions will be more risky in the sense that we are a couple of points higher from 27.37. We are almost 200 points higher, trading at 29, 10, 20 zone. So the risk will be increased by 200 points, and the reward is still the same. So if the third wave is expanding, maybe we might get another entry to take fresh positions. Intraday short-term traders might take partial profits off the desk. Please, partial profits, not complete ones. It becomes difficult to find out another entry after we take profits completely. So partial profits, please, and the expected targets is around 34, 35, which is not exactly by all means the best one that we were expecting, but who knows, it might go towards 1.3637 as well. But at least the Fibonacci ratios are suggesting that we might be pushing towards 35 before a break is expected. All right, before a turn lower or a break lower. All right, so that is the story in pound. Let's please try and explore what is happening in gold. Gold has been an absolute volatile instrument in the past three trading sessions. If you look at the price action that gold has produced, it's been okay. I've just done a few trend lines here in anticipation of potential bearish reversal. But if you look at the wave counts of wave story first in gold, it is quite possible that the yellow metal might have produced the fifth wave termination at 3169. All right, and could be a possible impulse as well, which is ready, followed by a very sharp corrective rally. And I'm not a bit surprised if the second waves are so sharp. When we've seen in the past, and that it comes as a no surprise to me that it could be a second wave, which could be very sharp, which could go very deep, and ideally second waves would terminate at the wave 4 of one lesser degree, but sometimes it would certainly extend towards the past wave 2 of one lesser degree as well, which can be seen right now. So by all means, if we look at it at wave 1 and 2, then I think last session we had wave 3 extensions upon us. Let's do it again. That is the third wave. If we do it in the Elliott form, then the third wave brings us closer to 2801. So whether 2801 or if we go by the simple three-click, it goes to 2830 at least, and after 2830 maybe we'll see a pullback and then continued lower. But I would definitely not be surprised to see that price coming up on the screens very soon, which is 2626, which is close to the previous wave 4 of one lesser degree, around 2537. All right, so I'm actually prepared for a huge decline in the wave structure in gold, the way prices are moved. But one condition, we should be staying, or the gold should be staying below 3169 for the structure to hold on the short side. All right. And the alternate count, if prices break above the 3169 zone, what it would imply or what it would mean is nothing but we are just short of one more wave before the fifth wave terminates. So it could be a shift of wave 1, wave 2, wave 3 right across that part, and this could be wave 4 and 5 higher again. All right. Let me see if it's a 38.2% touch. Yeah, it is almost 38.2%. It's quite possible that gold might have terminated wave 4. So this wave 4 might move here as an alternate count. But right now we are inclined more towards the fifth wave complete. All right. That is the story. At trading point of view, please remain on the short side. Aggressive traders, the stop around 3170 and the potential target at 2830 and at 2626. All right. So that is the story in gold. You might want to have a quick look at Bitcoin, but I don't think Bitcoin would have rallied through the 86 zone. Last time we saw it was trading around 82, maybe a bit more higher than that right now. I think it's lower right now. Maybe just partial shorts. If we are taking partial shorts, it's okay. It's a good strategy. But we would be more inclined to stay aside and wait until prices hit the 86,000 mark and probably more precise towards the 94,000 mark before we enter on the short side. All right, so still a bit more wait period for us. And another alternate count which we discussed last time was that if the fifth wave is by any chance unfolding as a diagonal or an ending diagonal, it is still possible for a continued drag lower towards 69,000 mark from here itself. All right, and that's why we suggested if you want, you can take partial short positions. And finally, the Dow Jones. We have initiated short positions in the Dow Jones in the portal after the last session itself. Okay, I've just by mistake I've erased the wave structure, but it looks like is it looking like one, two, uh, minute wave three, and possibly four? Uh-oh, I just started from the wrong price. Wave three could be subdivided into five waves. That is wave 4, it's quite possible, right? And it's going to be, uh-oh, let's do it again. I mean, let's not be intimidated by the surprising rally that Dow Jones has produced, right? In fact, we went short around 40,000, I think 40,800 right after the last session, the, the London Times. And if you see, we're already down 1,000 points from there. So this is how bear markets will actually want to behave. The corrective rallies are sometimes very sharp, very fast. Traders might get intimidated of a bull run returning, but that's normally not the case. If you look at the count here, if you look at the shape here, the second wave unfolded as an expanded flat, all right? So if you apply the guideline, I mean, not apply the rule actually, but if you go by the guideline of alternation, if wave 2 is sideways, or that's what expanded flats are in the category, then wave 4 will be sharp. And that's what we have seen here, wave 4 quite sharp. All right, ideally would stay, if it's an impulse, it would stay below that mark. And there's no fear of me plotting or anyone plotting wave 4 over here. And if that is correctly done, then maybe we are looking for a fifth wave. Let's try and see what the fifth wave is, or where the fifth wave could terminate. 25 500 something. Let's also see if there is a past support or previous support coming up. Not literally, but 25 500 is the next. It could be the next uh, target. Now the alternate count in the Dow Jones is also possible, where we got wave 1 and 2 and then again 1 and 2, and again 1 and 2. So it's quite possible that the third wave is unfolding, and the third wave is subdividing into 5 waves or extending. Alright, so once again it's 1 and 2, and then 1 and 2, and then again 1 and 2. So just imagine how far it could go and drop. Alright, if this is not wave 1, 2, 3, 4, 5, simple impulse, and if the third wave is extending, then you'd see wave 3 completing and then 4 and 5 by the time 5 waves complete. Right, many possibilities are there. If it's also possible it's an ABC, larger degree ABC, and another larger degree ABC might be on its way. Right, many possibilities are there, but the best count is being produced right now with an alternate of third extending. All right, and we are now actually short in the Dow Jones in the portal as well. So we are back in business on the south side. All right. So those are the stories as we move into the New York session deeper, and we'll be now back after a few hours to touch base or push the story, continue forward during the London Tokyo overlap, or Tokyo Sydney overlap. Sorry, and Euro is just about shy to push to a new high. All right. So let's bring the current session to a pause now, and we'll be back in a few hours. Until that time, once again for tuning, and as always, please do take care and God bless. Goodbye.